Be Wealthy and Smart, episode 615.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about why the real estate bubble is postponed, and more specifically, why that declining real estate market has been put off for a little while. As you know, I've been talking about how real estate was peaking, and in fact, I really believe it was. Why? Because we had 8 interest rate hikes from December of 2015 to September of 2018. And those interest rate hikes meant that sales in real estate slowed for 16 straight months. So the housing market was in fact slowing down, and that means that the peak of the market was behind us. But lo and behold, interest rates are now declining again. Interest rates declining will serve to prop up the real estate market for a while longer. So while we've had an interest rate cut, we're also rumored to have another interest rate cut in September, and the market is pricing in a 100% chance of that 25 basis point or 0.25% interest rate cut in September. So I do think we're going to see more refinancing, more housing sales, and in fact, after that 16-month period of slower housing sales, now that interest rates declined a 0.25 point, yes, we have seen sales increase for the first time in 16 months. This is the number of people buying homes is what I'm referring to. Interest rates are really important in real estate because people really buy a home based more on their mortgage payment and what they can afford and qualify for, rather than the total price of the house. So when rates go down, it makes housing more affordable, and it is something that people feel like they're being incented to buy because rates are cheaper. That's the cost of money, is what the interest rate is. And when the cost of money is cheaper, it incents people to go and buy, whether it's a home or a car or anything that's controlled by an interest rate. So just to reiterate my point, I want to share with you an article from CNBC.com written by Diana Olick, and it says, "Weekly mortgage applications rise as buyer's market takes hold." And she's got 3 bullet points here. Number 1, total mortgage application volume rose 2% last week compared with the previous week, according to the Mortgage Bankers Association seasonally adjusted index. Volume was 69% higher than the same week 1 year ago when interest rates were much higher. Number 2, the average contract interest rate for 30-year fixed-rate mortgages with conforming loan balances, which is $484,350 or less, decreased to 3.82% from 3.87%, with points increasing to 0.44 from 0.34, including the origination fee for loans with a 20% down payment. And number 3, mortgage applications to purchase a home increased 5% for the week and were 9% higher than the same week 1 year ago. So lots of people are applying for mortgages, and it definitely seems that lower mortgage rates are causing more people to buy homes again. Here's the article. It says, home buyers are taking advantage of lower mortgage rates and a slow summer for sellers, and that is driving mortgage applications higher. Total mortgage application volume rose 2% last week compared with the previous week, according to the Mortgage Bankers Association's seasonally adjusted index. Volume was up 69% compared with the same week 1 year ago when interest rates were much higher. The week's results included an adjustment for the Labor Day holiday. The average contract interest rate for 30-year fixed-rate mortgages with conforming loan balances decreased to 3.82% from 3.87%. Low rates, combined with more moderate home prices and more desperate sellers, are all bringing buyers back to the market. Mortgage applications to purchase a home increased 5% for the week and were 9% higher than the same week 1 year ago. More homes usually come on the market after the Labor Day holiday, marking an end of the summer slump. Some agents say the spring was particularly slow, so a lot of that demand may have been pushed off toward the fall. Dallas real estate agent Kelly McMahon said she is seeing a stronger fall but a pickier buyer. I feel like there's more inventory than there has been in the past. Usually in the fall, I'm a little slower, but I have not slowed down at all, said McMahon. I feel like there are a lot of homes hitting the market, but if they're not priced right, they're going to sit for a bit. The lowest mortgage rates in about 3 years did not push applications to refinance a home loan much higher, at least for the week. They were up just 0.4% compared with the previous week. They were still 169% higher than the same week 1 year ago, when the average rate on the 30-year fixed was 102 basis points higher, or 1.02% higher, at 4.84%. Refinances were essentially unchanged, but August overall was the strongest month of activity so far in 2019, said Joel Kahn, an MBA economist. So I just want to pause there. It just goes to show you that real estate is really impacted by interest rates. Since August overall was the strongest month of activity in 2019, that just proves my point that lower interest rates drive home sales. The article goes on to say mortgage rates fell throughout much of last week, and some lenders say that is precisely when potential refinancers hold off, hoping they will go even lower. By the end of the week, however, rates popped higher, and they are now at the highest level in over a month. This most recent break from long-term lows has been far more threatening, with 2 of the past 4 business days bringing the biggest single-day jumps in several months, wrote Matthew Graham, Chief Operating Officer at Mortgage Daily News. As a result, the average lender is now back to offering rates last seen in early August. The sudden move higher may reinvigorate the refinance market this week, as homeowners fear the recent lows may be over for a while. End of article. Well, people are expecting that the Fed will cut interest rates another quarter point. In fact, the market has priced in a 100% chance of the Fed lowering interest rates by a quarter point next week. So people were holding off for the refinancing, and this jump in interest rates scared people that they needed to lock in right then. But I think rates will continue lower, and we will continue to see more refinancing and more buyers buying homes. So what can you do? Well, if you haven't locked in a fixed interest rate yet and you have a variable rate mortgage, I would start getting your application in to refinance. Number 2, if you're buying a home, I would look to buy a used home that you can remodel and update. Maybe look at buying a foreclosure, or buy a home that's been sitting on the market for a while where you can come in with a lower offer and perhaps get the price down even more. And if you're a seller, I would price your house very competitively. Look at what the comps show have sold in your neighborhood, and try not to get the last dollar out of your house, but rather price it a little bit below where a current house sold in your neighborhood to generate more interest and maybe even generate multiple buyers being interested in your home. What you don't want to do is price your house too high and have it sit on the market and then have to really come in later out of desperation and start reducing your price and not have any pricing leverage on your side. So there you have it. Interest rates are trending down. After 8 interest rate hikes by the Fed, the trend has now reversed, and we're going lower on interest rates again, which has postponed the popping of this real estate bubble for the foreseeable future. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be updated as soon as new podcasts are available. And if you want to get more than just the 300 podcasts that Apple has, you can go to my website to get all 600 plus podcasts at lindapjones.com/podcasts. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.